Hey everybody, it's me, Gregory Mannarino. How are you today? It's Friday, February 16, 2018. People, I want to talk about something with you that I really think deserves some attention, especially in this environment. So we're going to do that. But before I do, let's just go over what's happening again as I am doing this video blog. Stocks are higher yet again, despite the fact that they opened lower. All right, it seems like this market is unstoppable this week, and we're all doing well. If you're in on this with me, I am still in this. It's a phenomenal trade. So we'll see how that plays out moving forward. If I do close this today, you know what I will do. As always, I will post it on my social networks, so at least follow me on one of them. Twitter, Google+, Facebook, whatever you want. I post it all over the place. So you can always get in a position when I get in, because I post these in real time, and out, so we can all make this work. Again, you're not going to lose on my watch. That's number one. Number two, today, as I outlined in my post-market wrap-up yesterday, is options expiration day. Towards the end of the day, near the close, we're probably going to see some gyrations. Let's see how that plays out moving forward. I am, again, considering strongly closing this position before the weekend. Lock in a profit here. We've all done incredibly well on this trade. So why be overly greedy? You know what I mean? When you get overly greedy, that's when there's a problem. So we could close our positions. We could reevaluate what happens on Tuesday. Remember, the market is closed on Monday, and I will not be here. And we'll talk about this at the end of the day. Now, look, this is what I want to talk about. Perfect storm. There's something developing here, despite the euphoria, and that's what we're seeing right now from the mainstream financial commentators. I mean, they're in their orgasmic phase again this entire week. They don't know what to do with themselves. Okay. But what's coming down the pike here? What are they not talking about? Again, it's the same scenario. Look here, don't look here. Because there is something going on that I don't think anyone is aware of that would be, unless you're paying attention to this, which I always do. What am I talking about? Let's reflect a little bit back onto what happened with the bond market as of late. No secret, literally from out of nowhere, in my opinion, because I didn't see this coming, and I admitted that, we had a massive, hard sell-off in the bond market that sent yields spiking, put pressure on stocks. We got this rebalancing going on, and the market has recovered nicely. However, the spread, people, and you've heard me talk about this, between the 10-year and the 30 continues to narrow. At one point last night, it was at 24 basis points between the 10-year and the 30. That's incredible. The yield curve is flattening. All right. So, as a matter of fact, I was on the phone with Greg Hunter, your friend and mine. Last night we were talking about this, and I said, Greg, I want to run this by you. I think he might have mentioned it in his weekend wrap-up. I didn't get a chance to watch it yet, but it's very important. So here's the perfect storm scenario. I want you to think about what I'm going to say here. So stocks appear to be ripping higher, and I would not be surprised. I would not be surprised at all to see stocks hit their recent high just before the sell-off. Now, as this is occurring, and if, and I believe this is going to happen, we continue to see the spread between the 10 and the 30 narrow, it's almost like a convergence of two storms in many, many ways. So, again, why is this important? It's a psychological barrier for the stock market, in my opinion, that if we were to hit a recent high just before the sell-off and the market were to start to drop, I think people are going to run for the hills. I really do. Especially if, again, the spread between the 10 and 30 continues to narrow. You got that? Or inverts. Now, it probably won't invert that quickly, but if we keep seeing that spread narrow, and it's been getting more narrow every single month, despite the fact that the Federal Reserve is apparently normalizing their balance sheet. How many of you actually know this? And if you don't believe me, go to the Federal Reserve's own website. The Federal Reserve's balance sheet that they're supposed to be normalizing has gotten bigger. It's not gotten smaller. It's gotten larger. And we understand why. They're still out here buying bonds, propping up things. It's just the way it is. They can't do anything else. So I think that's an interesting dynamic that you need to pay attention to. So let's just go back to this perfect storm real quick. I believe stocks could hit their recent high. If they do, at the same time, we're getting that spread narrow and we get a sell-off at that psychological barrier, which is now resistance, we could end up in a scenario where we get a much larger sell-off, much larger than the one we just had. What was it, like 11%, 12%, something along those lines? Now, why is this important? For a lot of reasons, but as traders, we can and will take advantage of this. I promise you that I will be watching this like a hawk. And at that time, if we see this scenario unfold, we are going to short probably the S&P 500 and make a stupid, did you like the way I said that? I really emphasized amount of money. It's the truth. We may see a 15-20% sell-off at that point, maybe larger. I don't know. All I am saying is this flattening yield curve is not a good sign, and everyone knows it, despite what the talking heads on the freaking mainstream channels are going to try to convince you. Oh, it's okay to have a flat yield curve. Oh, it's okay to have an inverted yield curve. Meanwhile, the last two times that happened, we had, well, the time before this, we had the 2008 meltdown, and the time before that, we had the dot-com bubble burst. But it's okay. It's okay. You know that, right? Look, you know that you can't listen to 99.9% of the stuff that comes out of their mouth. It's the truth. So anyway, I really wanted to bring this perfect storm scenario to your attention, and I want you to ponder that. I want you to think about that, and I would love to hear from you. A lot of traders follow this blog. A lot of people that are into this stuff follow this blog. Well, you know what? Let's start a dialogue. Start posting here. What do you think about this? Again, I will read the comments, promise. And again, let's sum all this up at the end of the day where we will reconvene. I'll see you then.